Metro Police cracking down on Airbnb and short-term rental properties.
And the people who invested their money in it, hoping for some passive income, aren't getting it.
Airbnb's dive sparks housing market crash fears as revenues per listing plummet by almost 50% in key cities.
More than 4,000 Airbnbs and short-term rentals could soon disappear from Atlanta.
Experts clash over potential housing market crash as Airbnb revenues plummet in some cities. Discover the gripping truth behind this catastrophic collapse. A must-watch for anyone seeking to understand the shocking risks and potential consequences of this seismic event. The spooky business. In the ever-surprising realm of the 2023 Doomsday bingo card, one unexpected entry stands out. Airbnb market collapse triggers next great economic depression.
What?
Few could have predicted such a development. A collapse in the short-term lease market would certainly make waves on Key Biscayne, where 146 Airbnb listings were available on a recent Friday. People are asking questions all over. What actually is happening? Spreading like wildfire, it took no time as it gained attention. Shortly after the Newsweek article picked up on a Twitter dispute between real estate enthusiasts over Airbnb's revenue. Kardashian show featuring Airbnb. We've got a real estate expert making audacious claims, while others raise an eyebrow at the data, and it's like a real estate Kardashian show unfolding before our very eyes. According to the numbers from all the rooms, revenues per listing for Airbnb have taken a staggering nosedive of nearly 50% in cities like Phoenix and Austin. But hold on a second. Economist Jamie Lane from AirDNA, the masters of performance tracking, throws some serious shade at those figures. They say, hold your horses, folks. The data from all the rooms is as accurate as a squirrel doing calculus. Yes, revenues are down in 2023, but it's merely a slight dip of around 3%, not the Titanic-level plunge they're claiming. Ouch. That's gotta sting. But guess who's striding in with a sassy retort? None other than Airbnb themselves, sauntering in with a statement to Newsweek. They exclaim, "Oh no, honey, that data doesn't align with our glamorous figures. We've been partying with more guests than ever before. Our nights and experiences booked skyrocketed a phenomenal 19% in Q1 2023 compared to last year. Can we get a mic drop, please?" Now enter the charismatic captain, Nick Gerli, CEO of Reventure Consulting, armed with a tweet that shakes the very foundations. He tightly clutches the All the Rooms data like a secret weapon and boldly declares the Airbnb crash is real. Gerli commented on the dip in almost 50% in cities like Phoenix and Austin, warning that desperate homebuyers may be forced to sell their properties, potentially igniting a housing bust reminiscent of the haunting 2008 crisis. According to the data from All the Rooms, several cities have seen a significant decline in Airbnb revenues per listing this year. We're talking drops ranging from 35.2% to a jaw-dropping 47.6%. Cities outlook. Let's take a closer look at some of the affected cities. According to All the Rooms, Phoenix, Arizona, and Sevierville, Tennessee have witnessed a substantial decline. Phoenix, the number of short-term rentals is estimated to be more than double the number of homes listed for sale. In Sevierville, Tennessee, Airbnb listings outnumber homes listed for sale by a staggering factor of 10. Gerli highlights a rather scary scenario for the U.S. housing market as he points out, data from All the Rooms shows 1 million Airbnb and Vrbo rentals compared to only 570,000 homes for sale. That's a huge disparity that could result in a downward spiral for home prices if struggling Airbnb owners decide to sell. It's like a mismatched dance-off between supply and demand. He also believes that newer Airbnb owners who bought their properties in the last 1 to 2 years with a mortgage might be facing trouble. On the other hand, more seasoned owners who purchased their properties at lower mortgage rates and are under less financial pressure may be more reluctant to sell. Now, let's bring in economist Jamie Lane again, who takes a more laid-back approach. Lane expects modest declines in Airbnb revenues per listing throughout the rest of the year, down around 1% for revenue per available room, or REPAR, with no growth expected in 2024. Opinion. Is an Airbnb crash as bad as it sounds? Now here's the real deal. Even if Airbnb crashed and burned, it wouldn't solve America's housing market woes. We've got bigger fish to fry, or should I say, bigger houses to find. Housing prices are at record highs, and mortgage rates are through the roof. It's like trying to fit a square peg in a round hole. Ouch. But wait, there's more. The root of the problem lies in a lack of housing supply. Builders haven't been keeping up with population growth and the demand from millennials starting families. We need more homes. We need them pronto. It's time to get those hammers swinging. So here's the scoop. The Wall Street Journal recently spilled the beans on Airbnb's financial woes. Brace yourself for this one. Those folks over at Airbnb recorded a whopping net loss of $322 million or 248.65 million pounds during the first 9 months of 2019. That's a far cry from the sweet victory of a $200 million profit they flaunted just the year before. Now you might be wondering, how could a company with a staggering $31 billion valuation as claimed by PitchBook in 2017 find itself in such a pickle? Well, it seems that the glittering horn of this startup unicorn might just be a sneaky carrot leading us astray. It's like they're playing a game of hide and seek with their IPO plans, leaving investors scratching their heads. But hey, let's not forget the silver lining here. While Airbnb stakeholders and investors nurse their wounds, let's raise a glass to the cities and countries dealing with never-ending housing crises. They're probably doing a little happy dance now that Airbnb's market influence is finally taking a nosedive. It's a bummer for those involved, but at least it brings a glimmer of hope to those struggling with housing issues. Talk about the short-term rental scapegoat, Airbnb. Sure, they play a part, but it's a minor one. They make up less than 1% of the housing stock. It's like blaming a sprinkle for causing a sugar rush. We've got bigger challenges to tackle. The blame game. The infamous housing crisis, a tale as old as time, and it seems blaming Airbnb has a starring role in the drama. Just like those sketchy lenders in 2008 handing out loans like candy, Airbnb has been accused of contributing to the housing market chaos in the US, the UK, and parts of Europe. It's like history repeating itself, but with a modern twist. Can we really put a stop to this massive multi-billion-dollar juggernaut? After all, people love Airbnb for its wide range of holiday rentals, from cozy rooms to entire properties, offering a unique experience that hotels just can't match. And let's not forget the economic perks for local economies, with more tourists and affordable holiday options boosting the cash flow. Homeowners and landlords also reap the benefits, cashing in on short-term rentals as a lucrative alternative. But hold up. In recent years, Airbnb's impact on local economies and rental markets has come under scrutiny. The Economic Policy Institute, a nonprofit think tank, conducted an analysis and found that the costs to renters and local jurisdictions likely outweigh the benefits for travelers and property owners. Talk about a reality check. As property values slowly rise, indigenous residents, often constrained by finances, find themselves pushed out. Major cities like Amsterdam, Barcelona, Edinburgh, and Los Angeles are hit the hardest, with over-tourism fueled by Airbnb negatively affecting house prices and communities. Even the short-term rental sector is feeling the burn. A Harvard Business Review study discovered that landlords are shifting their properties from the long-term rental and for sale markets to the short-term rental market, impacting housing stock. And get this. Another study found that a mere 1% increase in Airbnb listings leads to a sneaky 0.018% rent hike and a 0.026% bump in house prices. It might not sound like much, but it adds up for those looking for long-term rentals or buying a home. Remember when the banks went kaput and had to rely on government bailouts? Well, if Airbnb were to collapse, we might be in for deja vu. With over 4 million hosts worldwide, a significant chunk of them are property owners juggling those monthly payments. Now let's focus on Phoenix. Mr. Gurley dropped a bombshell, revealing that there are around 18,000 short-term rentals in the city, more than double the number of homes available for sale, which is a mere 8,000. That's like trying to fit a herd of elephants into a teacup. However, local real estate experts in South Florida remain optimistic. They believe that if short-term lease owners decide to move on, many of the Airbnb properties could transition back to long-term rentals, thus increasing the supply and potentially stabilizing prices. While Miami is known for its high rental costs, these experts don't believe that Airbnb will be the cause of a crash. Noah Fagari, a real estate agent from the Longstead at Corcoran Group, doesn't dismiss the possibility of other threats, like high interest rates or a bubble, but she doesn't see Airbnb as the catalyst for a crash. Regarding the possibility of owners selling their Airbnb properties rather than converting them to long-term rentals, Professor Ken Johnson from Florida Atlantic University doesn't foresee a foreclosure crisis in Southeast Florida. He believes that the mix of supply and demand will prevent such an outcome. So, while differing opinions and data analyses abound, the true impact of Airbnb's situation remains uncertain. Will it trigger an economic depression, or is it just a tempest in a teapot? Only time will reveal the answers. So what's the solution to this housing shortage mystery? We need more construction, my friends. Lower interest rates, affordable construction supplies, and addressing labor shortages are all part of the equation.